Meanwhile, the stock market setting record closes ahead of the holiday. Quiet now for Thanksgiving, but some investors are warning the market might be getting ahead of itself. Dow up roughly 750 points since Election Day, and this week it closed above 19,000 for the first time ever. The question now, how long can this last? Some analysts say investors might be putting too much early confidence in the president-elect's economic policies, which could still be years in the making. And Mark Avallone is a financial planner. He's the president of Potomac Wealth Advisors. Good afternoon. We appreciate you coming in. Is there anything to the idea that this is a Trump bounce, or might have this happened even if Hillary Clinton had gotten elected, where the market's just waiting for a fresh face?
Well, that's tough to say, but one thing is certain: there was a shift in which stocks were attractive to investors. A lot of the financial stocks had a great run, and that clearly was because of a Trump victory, a more kind environment on the regulatory front, especially for banks and large financial institutions who've had a huge move since the election day. Also, a lot of industrials have done well in hopes of an infrastructure spending bill. So no one knows what would have happened with the overall market if Clinton was elected, but certainly with Trump, we're seeing segments of the market outperform.
Well, Mark, and let's break that down. You make an important point, which is that in terms of Obamacare, for example, Donald Trump is going to need help from Congress, whether he repeals it or he just changes it. That's something that's going to take longer. But he can move on removing banking regulations, for example, trying to roll back some executive actions by President Obama in the banking front. Is that why we've seen some banking stocks just get red hot already?
Well, that's a big part of it. Regulatory costs were real to the banks. There were tremendous fines. They were under a lot of pressure and a lot of scrutiny. But also the hopes for this growing economy, whether it's from infrastructure or corporate tax reform, have caused interest rates to go up. And while that causes pain in some areas of the economy and in some areas for investors and on Main Street, higher interest rates help bank profits. Mm-hmm. So banks really had the double benefit of less regulation and higher interest rates, and that's what's driven them higher.
So if banks are doing well and they're likely to get more profit from higher interest rates, that means you and I are paying more for our mortgages probably, and that's the money that's going in their pockets. And so it might seem like that's a bad thing for consumers, but it seems to me if interest rates are going up, that suggests that the Fed believes that this economy is a bit healthier. Is that true?
The economy is getting stronger. It's been getting stronger this year, and the Fed was making rumblings about raising rates. I think they held off until after the election. A December rate hike was in the cards. We're pretty certain that's going to happen in December. But the market's already moved. The 10-year bond has rallied significantly since the lows in the summer. It's moved dramatically since the election. So the markets are moving interest rates, and we expect the Fed to follow in December.
I got one last question for you, Mark, and this is something that affects every one of our viewers, basically, whether it's for business or personal, which is it seems like as the economy picks up, oil prices go up. That means you're going to pay more at the pump, doesn't it?
Well, yeah, and that's a natural headwind of a market expansion, of a growing economy. We have rising rates, which could be a headwind, but we also have rising oil prices, which could be a headwind. So while the news is good now, markets move in both directions.
Mark, I got 30 seconds. If there was one piece of advice you'd give our viewers heading into the new year about what they should be doing with their money, what would it be?
Well, my biggest advice is to not get emotional and don't read the headlines and feel like you missed the chance to be at a stock market that's at an all-time high. Stick to your plan, stick within your risk tolerance, don't chase news, don't chase headlines, and don't be emotional about your money.
Seems like good advice in general. Mark Avallone, we appreciate you coming in on Thanksgiving.
My pleasure. Happy Thanksgiving.
Same to you.